What do you make of what you've heard, seen?
Well, the one thing that we haven't heard is the labor force participation rate. And I think that's going to be critical in understanding the edge down in the unemployment rate. You can't just look at the unemployment rate because we know people are leaving the workforce, and people are leaving, a lot of women are leaving the workforce because we're still in many places in lockdown mode when it comes to schools and childcare and health concerns. We see data showing that people over 60 are leaving the workforce. So we have to be really critical about that unemployment rate and hold it next to the labor force participation rate. And we see that edged down as well. Also, it's consistent with this cooling trend and why stimulus could be really helpful over these winter months while the pandemic is still surging and relieving those hard-hit consumers and industries.
Kate, what's up?
Joe, I have to say, earlier you asked whether or not this number had the potential to move the equity market. And the truth of the matter is, it's not going to be a number that's going to move the equity market dramatically. Look, what happened over the last month in November was a significant rally in terms of the equity market, based not just on the virus news, but the fact that we had these awesome third quarter earnings that seem to be really under-recognized. And at this point, the equity market is looking forward, not just to earnings, but to the vaccine rollout and to the fiscal stimulus. Those are the things that are more important at this point than, where we were in November payrolls. Everyone knew that the virus cases had ticked up and that there were lockdowns. But I think the important thing is, and I mentioned this before, the consumer's in really solid shape. And even if we don't have the same pace of hiring as we did maybe earlier coming out of the worst part of the pandemic, we are getting improvements. Corporates are in great shape. Their balance sheets look good and really positioned for both a rebound in growth as well as a policy tailwind to that growth in 2021. So I feel pretty constructive on the equity market, regardless of how it may trade today after this week's move.
Oh, we began with you, Jason. Now we'll finally back to you. At this point, you could always, I don't know, people, once you're in that game with actually making policy, it seems like it's hard to leave it. I mean, you could stay in Cambridge, to do it online, something like that. Are you absolutely sure you're saying never? Never say never.
I'm not saying never. I'm saying, well, I have a 5-year-old running around in my house. I'm certainly not going to be doing it. Great team he has. I'm friends with all of them. And they can read me in the Wall Street Journal, as I say, positive or critical suggestions. On this number, continues what we've seen in the economy. Positive first derivative, economy's getting better. Negative second derivative, it's getting better at a slower pace. I wouldn't be surprised if we end up seeing a negative number for December. That's the trend we're on. The thing that worries me most in this number for the short run outlook for the economy is, again, it continues what we've seen. The number of people on temporary layoff fell in the month of November. All of the job gains were people going back to jobs they were furloughed from. The number of people that were permanently unemployed, that left their employer went out of business, they're not coming back to their old job, rose, and it keeps rising. It's that second number that's going to be harder to solve going forward. When we're 10 million jobs short, when you don't have a lot of people left on temporary layoff, connecting those people to jobs are going to be a lot harder. Stimulus really important. Pent-up demand and the vaccine will help a lot next year. I'm still worried about, even with the improvement we'll see over the course of 2021, will we end the year with elevated unemployment? I fear that we probably will.
Shepard Smith here. Thanks for watching CNBC on YouTube.